Preparing for a Fund Operations Analyst interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a Fund Operations Analyst do? Fund Operations is the control function that keeps an investment fund running accurately after trades are made. I would describe it as the bridge between portfolio management, accounting, custodians, administrators, and investors. The role covers trade capture, cash and position reconciliation, NAV support, subscriptions, redemptions, expenses, and reporting. The key mindset is accuracy, timeliness, and exception management, because small operational breaks can affect valuation, investor reporting, and regulatory confidence. While answering, focus on the role as a control function connecting trading, accounting, custodians, administrators, and investors. Mention reconciliations, NAV support, cash movements, reporting, and operational risk management. Question 2. Walk me through the trade lifecycle from execution to settlement. The lifecycle starts when a portfolio manager or trader executes an order. Then operations confirms the trade economics, books it into the internal system, and matches it against broker confirmations. From there, the custodian settles cash and securities, and any mismatch becomes an exception. I would watch trade date, settlement date, quantity, price, counterparty fees, and currency. Clean trade capture matters because positions, cash, profit and loss, and NAV all depend on it. Make sure to cover trade execution, confirmation, booking, matching, clearing, settlement, and reconciliation. Highlight key fields such as trade date, settlement date, price, quantity, counterparty, currency, and fees. Question 3. How would you investigate a cash reconciliation break? I would first identify whether the break is a timing item or a true difference. I would compare internal cash activity against the custodian or bank statement, then trace the variance through trades, dividends, interest, fees, FX movements, capital activity, and wire transfers. For example, if USD cash is short by $100,000, I would check unsettled buys, pending redemptions, and bank charges. Once resolved, I would document the cause and ensure NAV impact is considered. In your answer, talk about comparing internal cash to custodian or bank records, isolating timing versus true breaks, reviewing trades, fees, FX, income, subscriptions, redemptions, and documenting resolution steps. Question 4. What would you do if the portfolio manager's position does not match the custodian's position? I would start by comparing the position at security identifier level, such as ISIN, CUSIP, ticker, and currency. Then I would review recent trades, settlement status, corporate actions, transfers, and any failed or partial settlements. A position break may be harmless if it relates to timing, but it can be serious if the fund is trading on incorrect exposure. I would escalate material breaks quickly, especially before NAV finalization or further trading decisions. Be sure to mention position reconciliation, trade booking checks, settlement timing, corporate actions, transfers, failed trades, short positions, and escalation. Show that you protect both operational accuracy and portfolio decision-making. Question 5. How is a fund's NAV calculated, and what role does operations play? NAV represents the fund's net assets attributable to investors. At a high level, it is assets minus liabilities divided by units or shares outstanding. Operations supports NAV by ensuring positions, cash, prices, income, expenses, subscriptions, redemptions, and accruals are accurate before the administrator calculates or finalizes it. I would not treat NAV as just an accounting number. It drives investor dealing, performance reporting, management fees, and the credibility of the fund. While answering, focus on assets minus liabilities divided by shares or units outstanding. Mention pricing, accruals, reconciliations, income, expenses, capital activity, administrator review, and final NAV validation. Question 6. What checks would you perform before approving prices used in NAV? I would verify that prices come from approved independent sources and compare them against prior day prices, secondary vendors, broker quotes, or exchange data. Large moves need explanation, while unchanged prices in illiquid securities may indicate stale pricing. For harder-to-price assets, I would follow the valuation policy and ensure proper approval. The goal is not to override markets casually. It is to make sure NAV reflects fair value using consistent, defensible inputs. Make sure to cover independent pricing sources, stale prices, tolerance checks, price movements, illiquid securities, vendor comparison, broker quotes, hierarchy approvals, and escalation when price changes materially affect NAV. Question 7. How do subscriptions and redemptions affect fund operations? Subscriptions bring investor money into the fund, while redemptions return capital to investors. Operations checks dealing instructions, cutoff times, AML or KYC status, bank details, cash receipt or payment, and whether the transaction uses the correct NAV. A subscription usually increases cash and investor units. A redemption reduces units and creates a cash payment. These flows must be tightly controlled because errors directly affect ownership percentages and investor statements. In your answer, talk about investor capital inflows and outflows, dealing dates, cutoff times, AML KYC checks, cash settlement, share issuance or cancellation, NAV dependency, and investor reporting. Question 8. Explain the difference between a management fee and a performance fee. A management fee is usually a recurring fee charged as a percentage of assets under management, net assets, or commitments. A performance fee rewards the manager for generating returns, often subject to a high watermark or hurdle rate. For example, a hedge fund may charge 2% management and 20% performance above the high watermark. Operations must ensure these fees are accrued correctly because they reduce NAV and affect investor allocations. Be sure to mention management fees as recurring charges on assets or commitments, performance fees as incentive compensation, high watermarks, hurdle rates, crystallization, accruals, and their effect on NAV. Question 9. How would you handle a corporate action in a fund operations role? I would first identify whether the corporate action is mandatory, such as a stock split or dividend, or voluntary, such as a tender offer or rights issue. Then I would validate the terms, key dates, security identifiers, and expected cash or position impact using custodian notices and market data. For voluntary events, I would coordinate the investment team's election. After processing, I would reconcile positions and cash to confirm the fund received the correct entitlement. While answering, focus on identifying mandatory versus voluntary events, validating terms, checking record and X dates, updating positions and cash, coordinating elections, and reconciling the outcome after processing. Question 10. What steps would you take if a trade fails to settle? I would first confirm the failed trade details: security, quantity, counterparty, settlement date, account, and settlement instructions. Then I would determine whether the issue is cash availability, missing securities, incorrect SSI, matching failure, market restriction, or counterparty delay. I would contact the broker and custodian, update internal stakeholders, and monitor potential costs or buy-in risk. Failed trades matter because they can distort cash, positions, financing, and exposure reporting. Make sure to cover identifying the reason for failure, checking broker and custodian instructions, cash or securities availability, SSI issues, escalation, buy-in risk, financing cost, and NAV or exposure impact. Question 11. How do fund expenses and accruals flow through the NAV? Fund expenses reduce NAV, so they need to be recognized in the correct period rather than only when cash is paid. If the fund owes audit fees, administration fees, custody fees, legal costs, or management fees, operations or accounting records an accrual until the invoice is paid. This creates a liability and reduces net assets. The important control is matching expenses to the right fund, period, investor class, and allocation methodology. In your answer, talk about recognizing expenses over the period incurred, accruals for unpaid costs, invoices, administrator fees, audit fees, custody fees, management fees, and impact on net assets. Question 12. What controls would you put in place to reduce operational risk in fund operations? I would rely on strong preventive and detective controls. Preventive controls include segregation of duties, maker-checker approvals, restricted system access, and standardized workflows for trades, payments, and investor activity. Detective controls include daily cash and position reconciliations, exception reports, price tolerance checks, and NAV review packs. The best controls also create an audit trail, so if something goes wrong, the team can identify ownership, timing, root cause, and remediation. Be sure to mention maker-checker review, reconciliations, exception reporting, segregation of duties, approval workflows, audit trails, static data controls, valuation policies, deadlines, and escalation procedures for material breaks. Question 13. What does a typical month-end close process look like for a fund? At month-end, the team makes sure all economic activity for the period is captured and validated. That includes trades, cash, positions, pricing, income, expenses, accruals, FX, subscriptions, redemptions, and fee calculations. Operations reconciles internal records to custodians, brokers, administrators, and banks, then reviews NAV packs and exception reports. The close is not just about speed, it is about producing a complete, supportable record for investors, managers, auditors, and regulators. While answering, focus on finalizing trades, positions, cash, prices, income, expenses, accruals, FX, capital activity, NAV review, investor reporting, financial statements, and sign-offs from internal and external parties. Question 14. How would you manage communication with an external fund administrator or custodian? I would keep communication clear, documented, and specific. If I am raising a break with an administrator or custodian, I would include the fund, account, date, security, amount, supporting file, and expected outcome. I would track open items, follow service level timelines, and escalate material issues before they affect NAV or reporting deadlines. Even when work is outsourced, the manager still needs strong oversight, so operations must challenge, verify, and document third-party outputs. Make sure to cover clear instructions, evidence-based queries, service-level timelines, reconciliation files, escalation paths, ownership tracking, professional tone, and the need to maintain strong third-party oversight. Question 15. If you had multiple urgent breaks before the NAV deadline, how would you prioritize them? I would prioritize based on materiality, NAV impact, investor impact, and time sensitivity. A large unresolved price issue or cash break affecting subscriptions would come before a small immaterial timing difference. I would quickly categorize breaks, assign owners, communicate the risk to the administrator or senior team, and focus on items blocking NAV release. If a break cannot be fully resolved before deadline, I would document the rationale, proposed treatment, and required approval. In your answer, talk about materiality, NAV impact, investor dealing impact, regulatory or settlement risk, deadline sensitivity, root cause, available evidence, communication, and escalation to senior team members. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.